So you finally found a business you're interested in, you signed the NDA, and the broker sent you a CIM, a Confidential Information Memorandum, and you're wondering, what the heck do I do with this thing? In this video, we're gonna go through what is a CIM, how should you read one like a professional, and what are the types of red flags you should be looking out for when you read through it. It's important to note that the broker put this packet together in order to sell the business. So there's gonna be a lot of sales language in there, there's gonna be some fluff, and your goal as the buyer is to try and cut through that fluff as quickly as possible so you don't waste time reading a CIM for a business that you're ultimately not gonna buy. There's generally 7 distinct parts of a CIM. Now we're gonna go through what's included in each of those parts, which ones you need to focus on intently, and which ones you could probably skim over. The first section of a CIM is generally gonna be the executive summary. This is gonna give you a brief background on the business and an overview of how long the owner has been there and maybe their day-to-day activities. You should definitely spend a little bit of time here, but it shouldn't be more than maybe a minute or two. The next section is gonna be their company overview. In the company overview, you're gonna get a little bit more in-depth analysis into what the company does on a day-to-day basis, who their customers are, how large of a business this is, and the breakdown of the team. This is a great section to read through to give you context on what you're gonna read in the rest of the CIM. The third section of the CIM is often the industry overview. The industry overview is gonna have a lot of assumptions built into it, and it's not gonna talk a lot specifically about the business that you're buying. If this is your first time looking at the CIM, it's probably not a section I would spend a lot of time on. The fourth section of the CIM is gonna lay out what the business's products and services are. This is where you're gonna be able to learn more about what this business does to generate revenue. And when you look at this section, you're gonna wanna seek to understand, are there any concentration issues where they're getting most of their revenue from a single revenue stream? You're also gonna wanna look at, are these revenue streams recurring revenue streams, reoccurring, or are they mostly project-based and one-off events? This is definitely an important section of the CIM so that you can get a full understanding of how this business generates revenue. It's important to understand these concentration risks because if there's a lot of concentration in a business, it adds a lot more risk in case you were to lose those key customers or those key suppliers. You also want to look for, are there any customers or suppliers that are large one year and then disappear the next? This could indicate there's potential churn issues with the business that you're looking at. The sixth section of a CIM is the financial overview. This is personally the section of the CIM that I start with because I know that if the numbers don't make sense, I could put this CIM down really quickly and move on to the next one to avoid wasting time. This section of the CIM is going to give you a year-over-year comparison of the revenue, expenses, and EBITDA calculation for the business you're looking for. In this section, you're going to want to look for large changes in margins year-over-year in the business. For example, you're seeing 40% gross margins one year and then 60% the next. You know there's something you're going to want to ask more questions about. You're also going to want to look for any add backs that are being proposed by the sell side. Sometimes these add backs might be really simple and they're just adding back depreciation and interest, which by definition would be added back to EBITDA. But sometimes you're also going to see much more complicated add backs that might indicate that your diligence process is going to be much more difficult in order to get this deal funded. The seventh section you'll see in a CIM is going to be the growth opportunities or possibly a projection for the business. This again, like the industry section, is going to have a lot of fluff in here and it'll have assumptions made about the business. Basically, the growth section of the CIM is going to show all the things that the owner is telling you that you could do that they haven't done. I wouldn't put a lot of weight in the projections in a CIM, and instead I would make your own assumptions about how you're going to run the business going forward. It's important to note that all CIMs aren't created equal because all brokers aren't created equal. So the deal that you're looking at might have a CIM that has a lot more sections in this and a lot more detail, or might have a CIM that has substantially less information. The important thing is that you find out a system that allows you to go through CIMs quickly and efficiently so you're not wasting time on deals that won't make sense for you. Throughout my career, I've looked at literally thousands of CIMs. Here are the 5 things that I look for in order to determine whether I should spend any more time with this business. The first thing I want to understand is what are the earnings of the business that we're looking at, and have there been large swings in those earnings, either a large increase or a large decrease, or a large change in the margins. Are they large enough to support the debt load that I'm going to need in order to finance this purchase? Are they changing a lot year over year, or are they relatively consistent? Or are the margins of this company fluctuating dramatically year to year? The second thing I'm looking at is how are the earnings being calculated? That is, what add backs are being included, and are those add backs legitimate, or does something seem fishy about them? The third thing I want to seek to understand is what is the service offering of this particular company? Is their service offering recurring or is it project-based? And is their service offering something that is going to produce problems that I'm equipped to deal with? Or is it something that my skill set is not well suited to deal with? The fourth thing I'm going to look for is any concentration issues. I know it's going to be a lot harder to get this deal financed if there is significant customer concentration in this particular acquisition. I also know that it produces a lot more risk to the deal if there is a ton of revenue tied up in just one or two customers. And finally, I'm going to seek to understand how the team is structured. This is really important because if the owner hasn't built a great team or their employees haven't been there very long, then there's a higher likelihood that you're going to be buying a job where you're going to need to be very involved in the day-to-day operations. However, if the team's been there a longer time and there's more structure to that team, then you can have a little bit more comfort that you're going to be able to step more into an ownership role, or you're going to be able to work more on the business rather than in the business. Hopefully this helped you understand what CIMs are better, as well as prepare you to get through them more quickly so you can spend more time on the deals that you're actually going to pursue. If you're looking at a CIM and you'd like a second set of eyes on it, reach out to me. My name is Chris Barrett. I'm the owner and founder of Midwest CPA. We help small business owners avoid buying the wrong company and then successfully grow the right one.